Oil trading is expected to be volatile in the next 2 days. The prices have faced a corrections decline early in the day, while the background remains moderately negative. Yesterday, the Brent crude soared above the level of $63 per barrel after the release of the official inventory data from the US Department of Energy. Rising oil prices and the weakening US dollar provided good support to the Russian currency, which managed to consolidate at comfortable levels. US crude inventories fell by 4.8 million barrels last week, while analysts expected a 1.7 million barrel decline. This news triggered a short-term rapid growth in crude by 3.6%. Still, oil production in the United States continues to hold at a record high of 12.9 million barrels a day. In the beginning of the session, Brent crude has lost 0.1% and is currently trading at $62.92 per barrel. West Texas Intermediate futures fell by 0.34%, reaching $58.23. Lately, there have been speculations in the market that OPEC Plus group will agree to reduce oil production by another 400,000 barrels per day during the meeting on Thursday. It is also widely expected that the existing agreement on oil output cuts will be extended till the first half of 2020 or even for the whole year. However, some market participants doubt that additional production curbs will be applied, so this meeting is unlikely to bring any landmark decisions. In case no additional cuts are approved, traders will probably start massive but short-term sales. Brent oil price may slip to the level of $60 per barrel. On the other hand, some statements in support of production cuts during the OPEC meeting may boost oil prices. On Wednesday, the ruble was trading firmly high due to the weakening US dollar and rise in oil prices. Against the US dollar, the Russian currency was trading at the mark of 64. In the early trade, the dollar-ruble pair continued the downward trend and settled at the level of 63.79. Meanwhile, there are no obvious reasons for the ruble to strengthen. Such eternal negative factors as repayments on external debts, rising cash liquidity, and the possible profit taken on federal loan bonds will prevail and wind down on the ruble. Currently, traders are looking ahead to the release of the US jobs report on Friday. Positive news about the prospects of the trade deal may boost market sentiment, thus sending the dollar-ruble pair even lower. You are watching Market News on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.